Welcome back for another top-notch video. This week we're looking at the week of 18 June through 22 June. If you have a TSP account, Roth IRA, or anything like that, this channel is for you. We will show you how to break down some of those numbers and end up making a good percentage on your TSP portfolio. This channel mainly follows the main indices in commodities and whatnot for TSP and also for Roth IRA. That being said, we usually go from very broad to more focused, so let's dive right into it this week, guys. As always, I'll have the charts here. So for TSP folks, we don't look at the life cycle funds. We don't look at the G fund really unless we're trying to go defensive or make a swing trade. And then these are our funds. For TSP folks, we go to the C, S, I, and F funds, and we evaluate those funds. For Roth IRA folks, we go to IVV, ETF, VXF, ETF, EFA, ETF, and AGG. To give you an idea, this is going to be your S&P 500. This is going to be your Dow Jones. This will be your international markets, and your F fund or AGG is your bonds. So for our first chart up based off our spreadsheet here is the C fund, or Roth IRA folks can be IVV. With IVV, we saw a decline this week like I saw on the charts. Okay, so we had that major top 2 weeks ago. Really looking to see if we could maybe, I don't know if we are going to bounce off this resistance line here. Very much likely we could. Or are we moving off our 20-day moving average? So we see some resistance here. So it's really depending on where we're going with this. And if we look at our technical charts with IVV, what I have here is our weekly chart. And what we're seeing is, had, like I said, kind of a indecision week, spinning top here. One thing it's kind of a little bit of a red flag here, folks, is we do have our blue line above our red line, which is always a positive thing, but we are seeing some from our DO, that oscillator here, this oscillator down here, our positive and negative energy, we went from a 3.57 to a 3.49. So we are declining on the weekly charts now for IVV or the C fund. That's a red flag to me. Usually when we see a decline on the weekly charts, we see some consolidation afterwards. Of course, charts overall are doing very, very well, but they do need to consolidate time from time. Again, on our 2-day chart, as you can see, we are losing a lot of energy here. We've started to see that with our price and with charts as well. If we cross next week, blue line or the red line, that would be a concern for us on this fund for IVV. Not a good time to really jump in IVV. If you're in IVV, I would maybe consider playing defensive, or if you're a long-term holder and buyer, I would just stay in the fund for the most part. Moving on to our next fund, which is going to be the S fund or VXF ETF for Roth IRA folks. With this fund, we are sitting at the very top. We were sitting at the top earlier this week with a new high. Like I said, we are out of the correction with the S fund or the Dow Jones, and this fund has just a lot of indecision going on. It hasn't really hit any resistance lines, and typically it will follow wherever the C fund goes, so we could see this decline in the weeks to come, but we'll look at it from a very technical perspective on our next chart. So with our technical charts, we see VXF or the S fund, the Dow Jones, still doing very, very well. Blue line above the red line. Here, still positive energy. We went from a 5.65 to a 5.86. That is good. Towards the end of the week, we saw just a top, not a spinning top, but on a 2-day chart. Now, granted, we are very, very high in energy here, so we could kind of see a slowdown here. And how we check our weekly chart is with our 2-day chart. With our 2-day chart, we are seeing some of the same things, some of the same warning signs we saw with the C chart. So we had close to 3 weeks decline, or 3 2-day chart declines, almost a week decline now on our 2-day chart. So spinning top here, as you can see. And as we can see in the past, when we were going down, we had consolidation, gains, consolidation, gains. Now we're kind of seeing this consolidation. Truth be told, to see if we will see this go below. Blue line has not crossed the red line, so it could be something like this or like this. It would be nice, though, if we could possibly mitigate the damage of something like this with our capital. So if we could get here or here and then mitigate this risk and then jump back in, that would be a benefit to us on this channel to try and do that. So we might look at something like that for our S fund this week, and I'll show you a little later on of something that we did in regards to that. But let's get through the rest of our charts first. So moving on to international markets, which would be the I fund or EFA ETF for Roth IRA folks. With EFA, we are looking at some serious carnage that happened this week. I don't know what happened with the I fund. It has to be something to do with those tariffs or trade wars going on, but it just rocketed down. We're now back into the lowest point of the low with the correction. As you can see, with this correction back in February, we hit a total of $67, and we hit that this week. So the I fund has really suffered this year. No gains, and we are negative for the year for this fund. Not a place to have your money at this time, not a place to be in. I would not have any funds allocated to the EFA or the I fund right now based off charts such as this one, and in our technical analysis we'll look at it. As you can see from our technical analysis, we have EFA on a weekly basis, and we continue to decline. We had some money in here back on the 18th of May, hoping that would continue to rise, have that blue line go above that red line, and see a positive movement with that chart. And ever since it backed away, so this is what we're kind of seeing with the C fund right now. We went from a DO of 1.62 to 1.13, and ever since we saw that first decline, we decided to go ahead and jump out of that fund. And ever since then, we have seen a decline from about $71 down to $68. So we are really, really losing some cash on this fund. And overall, since the correction, it's just a lot of indecision, not a lot of movement on EFA. Not really a place to have your money, especially after this week or today. I would not have my money in EFA. We were trying to come out here on the 13th of June with this negative energy here, and then we just hit a massive wall, and we just had a complete decline this week. Couldn't even recover from the week, and we are in negative energy on our 2-day chart. So I would stick out of EFA for right now. Leave that fund alone. Moving on from that, we are going to look at the F fund or bonds, which is AGG ETF. Now with bonds, EGG ETF, something that happened last week is rate hikes. Whenever the Fed tend to raise rate hikes, the AGG bonds will tend to go down, just because the bonds that are older than the newer bonds will have less of an interest rate on them, and so they're not as attractive to investors. So just keep that in mind. So when interest rates are being hiked, or when you hear interest rates being hiked, that F fund's always going to take a hit in regards to that. And we definitely are going to see that in the charts. But another thing too to consider is when they lower those interest rates, AGG or the F fund tend to increase. Overall, AGG for the year is negative. It's not doing very well. We have never suggested having money in AGG this year. The rate hikes have not helped. Like I said, there's a gap here that has not been filled with AGG. We're starting to see a resistance line in here. I hope it can hold, but we'll have to wait and see. And that rate hike last week, as you can see, just made it really stop this momentum here, I think. And for the most part, we had some momentum here. Right here, and now we have a lot of indecision because of that rate hike. I really think possibly it could go back to fill up this gap. Probability says on our technical charts that it's coming back for that. As you can see here, we are on a weekly chart positive for the most part, but the problem with this blue line being over the red line and being in the positive, we have not seen the price react to that. As you know, this is how we make our decisions down here, but this is the actual price action up here of what our stock is actually doing. So as you can see, ever since it crossed that line, which was right back here, we've been stuck at a 105.78 to 106 line. Not a lot of movement, a lot of indecision. Spinning top here, indecision both those 2 weeks, even though we are above the line. And as we look at it from a 2-day perspective, we are just not seeing, like I said, just not seeing a whole lot of price action all the way back here, with just a very up and down kind of right in that area, not making much money. One positive thing we did see on our DO, we went from a 1.15 to 1.19. So we'll have to see if price reacts. But until price reacts, we're just not really interested in AGG at all. That being said, that is our technical analysis for the week for all our funds. Looking back here, we did make an allocation shift, so just be aware of that going down to our funds. So we, in the past, have had it in VXF or an IVV or the CNS fund. And because we are a swing trader, we want to mitigate damages in the future because we think markets are going to consolidate based off of probability of our charts. We decided to move things to the G fund. Now, we didn't do that just now. We did that the beginning of the week. And you're asking, well, how would I know that you did that move? And here's where we did it. We always put the moves that we do inter-week in our comments. So this is last week's video, the 11th of June through the 15th of June. As you can see in the comments below, jumped into the G fund today for hopefully a good swing trade. Only time will tell. 100% G for now. That was 3 days ago as of, I would say today. So we did that on like Tuesday or Wednesday is when we did that move. We jumped into that G fund. And if you were to follow along with us, you ended up having a positive week, whereas most folks in the TSP or Roth IRA and those funds had a negative week. So that was a good move so far. We're hoping for a down week next week to safeguard some more of that capital or just mitigate damages from that. This is our swing trade always. And if you are in the market for long term, by all means, you should still be in those CNS funds or IVV and VXF. But we're going to try to make a little money here in the next half of the month for June and July. This was our first allocation change for TSP, so we still have 2 moves after this. So if it was the wrong move, we can quickly move capital back into those funds. But since we're already halfway through the month and we haven't made a move, we felt like this was a good time to try and do that. If you have questions about that, go ahead and write them in the comments below. Always interested in your guys' questions. As you can see, with our future allocations are still going to the S fund as of now, so that's just one thing to note. Other than that, guys, that was basically our video for this week. If you like this video or want to subscribe, please do so. Or if you want to share it, please do. If you have friends that have a TSP or a Roth IRA and don't really know what they're doing or want something to do, this is the channel for you guys. It's a 10-minute review of your funds and how to really stay on top of those funds in regards to your TSP. So just a really good little channel to help you guys out. As always, like I said, like, subscribe, or share this channel. And that's another top-notch video. We'll see you guys next week.